Good morning to Afore Consulting Discussion with. Today we would like to look at the International Platform for Sustainable Finance, one of the important initiatives by the European Commission around the Sustainable Finance Work Program, looking at the international aspects of this work. And we would like to focus not only, but in particular on the Asian dimension today. To start us off, Caroline, I can pass over to you.
The post-COVID-19 recovery and the transition towards a more resilient, sustainable economy will need to go hand in hand. They will require unprecedented scale of investment, especially in high quality infrastructure. Sustainable finance have dramatically, significantly increased over the last year, but this growth remains very insufficient to meet our climate objective. The green bond market has also grown to reach annual issuance of about 250 billion USD a year, but this also remains a bit little if we compare it with the total global bond issuance. This only represents 3.5%. One of the most challenging part is the fact that we still have an absence of coherent definition of green investment, taxonomies, and the degree of standardization and transparency remains low. Countries have started to develop their sustainable finance roadmap and sustainable finance frameworks, but when developing their own sustainable framework and their own sustainable finance roadmap, they have understandably reflect their own environmental priorities, local needs, and stage of market development. So the risk that fragmented practices lead to insufficient financing for the transition globally is real. To mobilize international investors and to scale up cross-border green investment, there is a need to promote integrated market for environmentally sustainable finance. This means coordinating approach and developing coherent sustainable finance frameworks and tools, and especially in areas that enable investors to identify green investment opportunity across the globe. And this is the reason why the European Union has launched, together with other countries, the International Platform on Sustainable Finance. Altogether, we are now representing 14 countries plus the European Union, and altogether this represents 55% of the global emission, for 50% of the global GDP, and 50% of the world population. And the main objective is to promote integrated market for sustainable finance. The main focus of work of the IPSF is really on green taxonomies, so classification of sustainable economic activities, green financial product standard and labels, and disclosure of sustainability related information. Two big reports are expected for next year: Common Ground Taxonomy end June, early July, and a report on disclosure by November 2021.
How you view this initiative, and also bring this a bit to the Asian dimension. Where do you see the similarities, but also maybe some of the differences in how you view sustainable finance, or some of the elements that are foreseen under the international platform?
Singapore is strongly supportive of IPSF as one of its members. To win the fight against global change, Asia must make the transition to a low-carbon future. Asia accounts for about half of global greenhouse gas emissions, and Asia's demand for energy will only continue to grow. Asia's transition to lower emissions needs to be progressive, yet determined, recognizing that a well-planned transition can create employment and growth. A critical enabler for Asia's march towards sustainability will be green finance. Finance fuels the economy, shapes investment decisions, and drives action. Singapore can play a key role in mobilizing green finance to facilitate Asia's transition to a sustainable future. Singapore has launched a Green Finance Action Plan comprising 4 key strategies. First, strengthen the finance sector resilience to environmental risks. MAS has co-created with the finance industry a set of guidelines on environmental risk management. Second, develop green finance solutions and markets. MAS has launched a green investments program to place $2 billion of our funds with asset managers with strong green focus. To facilitate green finance flows, Singapore is also exploring the potential of a green and transition taxonomy for Singapore-based financial institutions, building on existing taxonomies globally. A taxonomy that actually recognizes transitional activities will bring on board many companies and support the transition pathways. And I think one key area is, of course, this green and transition taxonomies will enable Asia's supply chain companies to better benchmark their sustainability progress and tap into sustainable products. Third, harness technology. MAS has launched the Global FinTech Innovation Challenge to seek innovation solutions to address climate change and pandemic issues. For FinTech innovations, whether it's blockchain, artificial intelligence, Internet of Things, it can really address climate change challenges. And more importantly, it can inject greater transparency, integrity, and efficiency in sustainable finance flows. For our Global FinTech Innovation Challenge, we have garnered over 600 submissions from over 50 countries. And some of the shortlisted solutions are very interesting. Last but not least, build knowledge and capabilities in sustainable finance. Last month, we launched a Singapore Green Finance Center, a partnership between Singapore Management University and Imperial College to conduct Asian-centric research.
Standardization, though, I think can be even more effective if it's also met with catalyzation and democratization. These three factors, standardize, catalyze, and democratize, are, in my view, the three things that we need to really focus on to drive more sustainable finance. There are two things in particular that will help further catalyzation of the capital needed. The first one is we need green to become 1,000 different shades of green. We need the development of a transition taxonomy to support the pathway from brown to green. I think the other area which hasn't been discussed so much so far is we also need green to become a rainbow, and picking up, I think, on social issues and the alignment to the broader sustainable development goals. And then we need to democratize. We recently published that shows that financing the exact same solar project in, say, India compared to France will actually have 7 times the impact on CO2 and climate change in India than it would in France, given the current state of the grid's sources of power. We need to recognize the different positions that these countries are in and also direct capital to where it can have the biggest impact.
ESG disclosure will be an important part of the policy and regulatory framework, and the more companies disclose climate-related information in a globally consistent and comparable manner, the better the bank can assess and understand our borrowers and our clients' risks and strategies so that we will be able to help them move forward to transition. I would like to introduce a Japanese initiative to implement TCFD disclosure. The Japan set up the so-called TCFD consortium and invite many corporate companies in Japan and who adopt the TCFD recommendations. And that reaches more than 300 companies right now. The benefit of the TCFD consortium in Japan is to share the best practices and discuss how we best disclose the information in relation to the climate-related issues in terms of the business strategies, risk management, and governance and metrics and targets. I think that the taxonomy will be very useful disclosure tool to gauge and track the sustainable activities over time towards 2050. And so, in that sense, I think the EU taxonomy can be very useful for disclosure issues. If we can utilize this taxonomy as a disclosure tool, then maybe it will be useful for emerging markets as well, and also in Japan as well.
The biggest point to make about Asia is that so far green finance has been a bit of a dilettante Western European marketing game. I am really pleased with IPSF doing so well at gaining Asian members, and with well over a dozen financial centers committing to green finance targets, including sometimes their position in the index, and the Chinese announcements on net zero and national emissions trading, and the Singaporean announcements. I expect this to change very, very rapidly. Taxonomies, I think, should be looked at as a step on the road. They add complexity, and I feel that this is an area which we're already seeing in the green bond sector. Sean Kidney and the Climate Bond Initiative have actually moved forward in many ways, but we're moving to a different type of flavor of ESG bonds. A lot of this discussion here is about increased complexity. When we're looking at the cross-border flows, what investors like is simplicity, and this is becoming really complicated, and we're making it more complicated. We really just need a lot more clarity and simplicity of actually going back to the core targets.